gold is really the only commodity market big enough to be like a long-term store of value. Gold is kind of the present option the central banks have. They can, they could drive the size of that market up by 50% or 100% in a pretty short period of time. Generally, when you have new technologies and sovereign debt crises, that's when you get shifts in the monetary system, right? So the prior shift was the 70s. The one before that was the 30s and 40s. And so I do think that we're on the verge of kind of another monetary transition. And, to your point, one of the arguments I made is that, this period is pretty unusual where we have like one fiat currency at the heart of the whole system. People assume you have to have like, what is the world reserve currency going to be? And it's like, well, this was the anomaly, I would say, that basically after World War II, the United States was like 40% of global GDP. Right now it's down to 20% of global GDP. There's no country big enough to be the world reserve currency alone, and nor do they want to. Nor is there enough geopolitical consensus and power concentration to have a hyperpower that can just dictate terms, right? So I think we're heading in a more multipolar world, which includes a multi-reserve currency world. So you can look at, say, the SDR basket. That's 5 major currencies. They're kind of the reserve currencies, and the United States dollar dominates it. But I think over time it spreads out a little bit. We've already seen that mildly for 20 years. So the U.S. dollar share of global reserves hit a peak about the year 2000, and it's been in a kind of a sideways to mildly down trend. And I think that continues, could accelerate. Countries are saying, okay, well, so if my reserves can be frozen, they're not risk-free, and they're already yielding below the inflation rate, as we just discussed. They're being financially oppressed. They're just melting ice cubes. So what other assets can I put reserves into? So one option is you could go into a couple different currencies. So Russia, for example, had their dollars and euros frozen, but their yuan and their gold is still fine, right? So you can do that. And then 2, you can get into gold. And gold is really the only commodity market big enough to be like a long-term store of value. It's even then, it's not really big enough. It's, if you do the math on what it would take for China to go to an official, and now some estimates think that China has more gold than they say, but let's just take them at their face value. And they say, okay, they want to get up to a 20% weighting of gold reserves as a percentage of total FX reserves like Russia has. What would it take? Well, the gold market's not really big enough to absorb that flow without a big price increase. And that's just China. What if every country wants to go, whatever allocation they have to gold, they want to increase it by 20%. This is not a big enough market. And then you can look at things like Bitcoin and you say, okay, there's a neutral reserve asset. There's a payment channel that's, relatively permissionless. That obviously has interesting geopolitical locations as a kind of a reserve asset, but it's a less than $1 trillion asset right now. It's not big enough, right? So I think over time, Bitcoin can become big enough if it continues to show that it's hard enough and that it's sturdy enough to support that kind of capital. I think in the meantime, gold is kind of the present option the central banks have. They can they could drive the size of that market up by 50% or 100% in a pretty short period of time. And then Bitcoin has to get multiples bigger in order to kind of serve a similar role. When you have major transitions, there are risks like that. And, generally they will try to disguise it, right? So for example, to add to your list of examples, we're seeing now, so energy companies had a terrible 12 years, 10 to 15 years of returns. They, there are energy stocks that are cheaper than they were in like 2007, 15 years later. They went through periods where they had negative earnings. They had to write down losses. Now they're in a period where they're actually earning quite a bit of money. And some countries are coming in and say they're gouging prices. We have to do windfall taxes. We have to, now that they're actually having a good couple years, we have to do windfall taxes. So that's another example where you can have kind of changing the rules or narratives shifting around how to provision the government more, right? And it could be, let's say Bitcoin goes up 5x. It's like, well, all these rich Bitcoiners, let's do a windfall tax on the Bitcoiners. Or gold went up so dramatically, let's do an extra windfall tax on gold. Part of the reason that nobody wants to own Chinese stocks right now is they spent a whole year just constantly changing the rules around how they're going to treat their big companies. And now they're saying, hey, we want to wrap up regulations. We want to respect property rights. We want to encourage international investment. And they might come back, but it's like it takes time to then build that trust again, right? To say, okay, what do I own if I own Chinese companies, right? And so generally one of the strengths of the West has been that you have pretty strong rights when you own property throughout Europe, Canada, United States, countries like this. And if you do threaten that, that can have implications for the ability to raise capital in the future and to get things done. So I think when you have decades of stress, like I think we're probably going through with commodity shortages and inflation and kind of the breakdown and some fiat currency, starting with the weaker ones and then kind of moving towards the main ones, um, you can get pretty extreme actions and you can get kind of rising populism on the right or the left. And that can encourage kind of extreme behavior if you start to get kind of a very strong political consensus. Canada could do certain things that disrupts its future here, but I do think that among countries going forward in a market that I think is, I don't think commodities are going to go straight up for a decade, but I think that when we look back at the end of this decade, it'll have been a very bullish decade for commodities. I do think that Canada is well positioned for that. And so I am pretty favorable on a number of Canadian assets, but I diversify it as part of a portfolio because I have to worry about jurisdictional risk.
Sure.
But my base case now is that we're going to see a spectrum across the world. So in China, central bank digital currencies are already here. They're just kind of been arriving over the past couple of years with testing and kind of rollouts. And so China is capable of doing it partially because they started researching it in 2014. So there's like kind of a long cycle for that. It's not something you just put together in 6 months. And so as the rising power that doesn't really like the current system financially, and as a country that very much likes surveillance and control, they viewed central bank digital currencies as a natural fit. In the West, it's more challenging, right? So the ECB published a document back in 2020 talking about the benefits of CBDCs and what it can mean. It can give them more seigniorage. They can basically take market share back from banks. They can surveil and control more. They can do kind of more deeply negative, below zero rate policy. It gives them more tools, which if you're on the other side of that, sounds terrible. Regulations try to make stable coins more backed by kind of by more provable reserves. Maybe only banks can issue them, or maybe you have to have them 100% banked by cash and treasuries, for example, and that they can incorporate those into the system. And then those are kind of an arm's reach central bank digital currency, right? So for example, large banks are obviously going to comply with government regulations in the United States and Canada. And so I think that, and then they can hire technical providers to kind of administer the technical details of stable coins. I see stable coins being more relevant in the West and CBDCs being more relevant in say places like China, and Europe's maybe a little bit between the two and still remains to be seen. I think you can see a spectrum of government control